Does this dollar correction last, in your view?
So we think it will last a little bit longer. So our view is, yes, into CPI, the temptation by investors will be to cut long dollar risk and maybe short risk in equities, maybe short risk in duration. What happens after CPI very much does depend on CPI. But I think even if the CPI reading isn't particularly low, that tendency may well last a little bit longer. And that's because we think a lot of the trends since early August have gone quite a long way. And that is, again, lower in equities, higher in the dollar and in global nominal and real rates. Yet all of this is temporary. So for us, the trend isn't reversing quite yet. It is yet another dollar correction and bear market rally.
Got it. So the rate differentials on a global basis, the underpinnings of this elevated dollar, they remain. And it's worth noting, isn't it, that about 2 weeks ago, the Fed's preferred gauge of inflation, although it eased in July, that really didn't knock the Fed at all. We still heard a lot of hawkish rhetoric being trotted out.
No, absolutely. I think that the Fed's projection is pretty clear. It wants to make sure that it can accomplish its mission and that it has still quite a bit of work to do. But at the same time, we know that a down phasing in the pace of tightening is in store. So I think what markets are zooming in right now is that after September, I think it is fairly unlikely, not inconceivable, it's fairly unlikely that the Fed will continue to hike at a pace of 75 basis points. And as a result, as you mentioned, maybe that relative differential between the Fed and other central banks, but also the near-term pressures on equity markets are receding a little bit. And I think that's really what's driving this relief rally.
All right, Vish.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.